Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. One of the things I love about Warren Buffett is this idea of buying companies, great companies, when they are really down, when everybody else is ignoring these companies. And that is what makes him what's called a value investor. A value investor is basically someone who basically uses these investment strategy that involves picking stocks that appear to be trading for less than the intrinsic value or book value. What that means is these basically investors look for companies that have completely been ignored by the general markets but seem to be trading way below their intrinsic values or book values. So what do? They basically ignore the movement that happens during the day when it comes to the stock prices, but they focus mainly on the fundamentals. Is this company a company that's going to make me money in the next 5, 10, 15, 20 years going forward? And Warren Buffett and Benjamin Graham is actually one of the pioneers when it comes to that, and even Charlie Munger as well. So it's really important to now sit back and think, okay, what companies are out there right now that seem to be really cheap? And when we say value investors and long-term investors, that is really important. The long-term part is very crucial to the whole thing, because the company that we're going to talk about today, if you have the patience, okay, I'm going to show you some of the good and the bad, obviously, and it's your decisions to then make a decision whether you want to invest in this company or not. I'm not giving you financial advice, but I'm just giving you the facts and what I've seen in the markets, okay? And the company we're going to talk about today is Intel. Intel, I'm sure you know about the company. They have been around for a long time. The computer you're using right now, maybe to watch this video or whatever, is actually basically has a chip that was created by Intel. And if you go to Morningstar, for example, the company is right now 41 or almost 42% discount at the moment. Okay, their price should be about 65 according to them, based on their intrinsic value. Right now, it's trading up below $40 per share. It has a wide mode, and when you look at this here, it says Intel is the leader in integrated design and manufacturing of microprocessors found in PCs and servers. Now, majority of the computers out there, whether it's a laptop, a desktop, and the servers out there, use a microprocessors basically that are being created by Intel. With the rise in interconnectivity of devices, Intel strives to provide the most powerful and energy efficient solutions to any product, smart and connected. The data centers basically used to facilitate information stored, analyzed, and accessed by various front-end devices are mostly run with Intel server chips. Now, to me, this is industry-leading company. They're not just your typical high flyers. Yes, there's a competition between AMD and Intel, but the way I see this is now the majority of the servers out there, the data centers, obviously have now basically used either AMD right now or Intel. Now, one other thing you need to think about when you're thinking about this whole situation is the Apple side of things. Apple is creating their own chips, and I get that, okay? But the majority of the PCs out there and the servers have a chip that was created by Intel. So let's have a look at some of the other things that's happening. Let's look at the fundamentals of the business first of all, and then we'll look at what the news is and what the projections are when we think this company will start making money. Okay, right. If you look at the company itself, right now its current price is $38 per share. Like I said, is one of the biggest companies in the world right now, $155 billion company. Okay, PE is only 6, price to sales only 2, and EPS is 3, but it's declining next year. So that is the most important part. And this is why I said value investors ignore this part, because they know what might happen in 5 to 10 years down the line. They don't know, but obviously they can project that. They can estimate what might happen. And I'll show you exactly what one of the reasons why value investors love this company. Okay, current ratio is above 1, which is good. Beta is very low. Operating margin, so this means to me they have basically almost zero debt. Okay, beta is quite low, operating margins 27, and sales $77.70 billion. Okay, that is huge. And the total returns in the last 10 years, you're looking at about 6%. Okay, now net income $26.62 billion, profit margin 31%, return on equity 26%, and they have a free cash flow of almost $10 billion. Now this free cash flow was a lot more than that. I think it was at some point a year ago, I think it was almost $20 billion. I will tell you exactly where that money went in a second. They do pay nice dividend of almost now 4% or $1.46 for every share that you own. Payout ratio really low. So that means they have the capacity to increase it. 5-year growth rate of just 6% and dividend safety of 80%. That means they are really safe. And they have increased this dividend for 23 years in a row. When you look at sales, okay, from the revenue side of things, $70.84 billion in 2018, almost 72 in 2019, 2020 was 77.6, 2021 was 79, and currently there's a little bit decline. So the decline basically starts from now onwards, if you like. But the last 4 years, okay, the company's been doing really well. And as you can see, the profit margins is obviously 43, 42, 43, 43, 42. So it's kind of stagnated. It kind of stayed the same because their cost of revenue has actually gone up a little bit from 27 to $35 billion. That could be the fact that there's a shortage. There's loads of other reasons why the cost of that revenue has gone up a little bit. EBITDA from 32.8 to right now 34. Okay, so that is definitely increasing. And free cash flow, like I said before, from 14 billion to 16.9 to 20.9. This is what I'm talking about. So 2020, it was almost to $21 billion. Half of that money is gone now, and I will tell you exactly where it went in a second. The other thing the company is doing, they're buying back their shares. So their shares outstanding. Majority of the companies are out there, they're diluting the shares that you actually own. So every share that you own of this company, okay, because they're buying it back, is now worth more, if you like. But when they dilute it, your basically share is no longer worth what it was before. So they are buying back their shares. And as you can see here, year to date, they're down about 26%. Just like what the market is doing right now. So according to Morningstar, it's 42% down at the moment, discounted at the moment. Simply Wall Street about 83. So they expect this price to be $230 per share. That is mad. Tip ranks is 36.65. Okay, they're saying about 51, and then Yahoo Finance are more or less the same, $50 per share. Now, next through 5 years, the earnings are expected to grow about 3.24%. That is decent. That's like, for example, consumer staples. For it, and you're not paying for high prices. You pay basically multiple of 6, okay, and price to sales of just 2. And you get in basically 3.24% next 5 years in terms of growth wise. And top of that, you gain about 3% in dividends. Okay, almost 4% in dividends. Now, one of the reasons basically this company has not done well is because they missed a couple of deadlines and for some of the chips that they're producing, and AMD came out with it, and they basically lost a little bit of a market share to AMD. And I think that's probably going to continue maybe another 2 years. Let's be honest, 2 to 3 years, maybe 5 years. But what this company is doing, they're investing in the future. So if you are a long-term investor, and I don't mean 3 weeks, 4 weeks, I mean 10 years, 5 years to 10 years from now, this company seems really interesting. Okay, 100 billions in Ohio chip plants. Okay, there's a little bit situation going on with the Senate right now, so they're trying to approve that basically deal as quickly as they can. Once that happens and they start working on this might take, I don't know, a couple of years to actually get that, and then another 3, 4, 5 years to actually see any benefit. Okay, and the margins will start improving, the sales will start becoming bigger. Okay, the other thing they're doing, so this is only the Ohio in the US, they also get into Europe. In Germany, they're also building 36 billion to make big chips in Europe as well. So they're not just focusing on the US only, they want to take over globally, just like they were in the last 10-15 years. So this is a company that is right now in a downtrend because of the fact that they have missed a couple of deadlines and they are investing heavily in the future. And if you think this sounds good in terms of what you've seen here in the financial side of it, and obviously when you look at the sales from, for example, let's just zoom out a little bit. Okay, sales growth 2022 is basically almost flat, nothing. But 2023 onwards, okay, they start picking that up. So imagine we're talking about 2023 being almost 3%. And then they might start increasing from 3% to 4% to 5%. I'm not sure, but according to Yahoo Finance, as you can see here, next 5 years, we're expecting about 3.24% growth in terms of earnings. So this is one of those companies that genuinely right now seems a good investment based on what they're doing for the future. And if you think about what Warren Buffett and the Benjamin Graham have talked about in terms of value investors, okay, they're not worried about what's going to happen. They're basically the price movement of the stock. They're thinking about the long-term fundamentals of the business. And this business has enough cash to basically reinvest in the business. And that's exactly what they're doing. So if you are a long-term investor and you are a value investor, this might be one of the companies you should look up right now and see if there's a fit for your portfolio. Now, I do own quite a few stocks in the semiconductor companies, and this is one of the ones I'm definitely considering adding to the family portfolio, because that is the one that is going to be around, InshaAllah. My children are quite very small right now. My plan is for that, hopefully by the time they go to university and so on, we can start using that portfolio if possible. So that is something that I might add, basically a portfolio I might add to basically I might add Intel to that portfolio for that reason, because it's for the long term. I'm not gonna, some of the stocks that I've got in there right now are just genuinely like companies that I think will have a better futures, companies that are down quite a bit at the moment and so on, and companies my children like as well. So I'm kind of having a little bit of balanced portfolio for them. At the same time, this might be a good fit for that type of portfolio. So there you go. Okay, if you're looking for a company that is dead cheap right now, everybody hates it, they want to ignore it completely. Okay, they want the high flyers, they want the, for example, the Nvidias that can go about 4% a day, for example, your AMDs, the Qualcomms, and these companies are great, don't get me wrong, in terms of, for example, companies like Broadcom and Nvidia and AMD and Qualcomm are very much in the right place right now at the right time, and they are doing really well. Their growth is absolutely amazing, but don't ignore Intel because of the amount of cash they have. Pick any laptop right now, go to if you're in the UK, go to PC World and check out, or just go to the PC World website.com. Genuinely, you'll see Intel products in there, and you will have, basically you will keep seeing that for the next at least 10 to 15, 20 years from now. That's the company that I want to share with you guys. Like I said, value investors love this company, and I just want to look at it a little bit deeper. Again, if you're really interested, go into their website, see what other products they sell, who they sell it to, the type of chips they actually make, and the fact that, yes, you will. One of the things that you'll notice is they're slightly behind when it comes to the newer and better chips that actually AMD is making right now. But I think that is something that's going to change in the next 5 to 10 years. Anyway, I hope you enjoyed the video. If you have, please like the video, subscribe to the channel. Let me know if you have any questions. Take care. Assalamu Alaikum. And Eid Mubarak if I don't release any videos between now and tomorrow. So Eid Mubarak to all of you. Have a wonderful day. Assalamu Alaikum.